All right, guys, looks like Bitcoin's hanging on by a thread here at 63K. We're about 3 days out from the halving, and historically, Bitcoin has dropped around this time or just after this time being the halving. So today's video, I want to share my thoughts around the crash or the potential crash, the possibilities, what we could look out for when it comes to the pricing to the downside, and of course, a lot on the altcoins, as I still think this is an opportune time to be rotating into strong altcoins, buying strong altcoins, getting set in positions, just buying more of them, because these times don't last forever. Now, today's video might trigger some in the titles, but you guys have done amazingly well to help us beat the YouTube algorithm, essentially not show ridiculous faces on the thumbnails, and also keep the titles relatively simple. So with your help, hitting the like button, subscribing to the channel, hitting the notification, that all helps out the YouTube algorithm and of course allow the audience to see what they want to see as opposed to crazy, massive thumbnails and headlines. So with that in mind, let's kick it off going through the traditional markets before we get on to Bitcoin and those potential corrections, where they could lie, the invalidation and the invalidations to get there. Okay, guys, interest rates, big talk of the town. Now we're starting to see, for the first time, interest rate increases showing up on the probabilities. I lie. There was a particular time that we did see them. They got wiped off, and now they're back down the board with at least a 0.1% chance through every single meeting leading into April of 2025. Yesterday, we saw a first with the first change where we would only see one interest rate cut. Now we're starting to see the possibility of interest rate increases getting thrown up here. So I think the stock markets are basically starting to price this in, which is what this correction is about. It's also part of an election year seasonal pattern. We're seeing a lot of the stock markets correct at this point, the largest correction in 6 months now. I did put that warning out. Just want to repeat it here. 11 days ago, Bitcoin's entering the biggest stock market correction over 6 months. Definitely looking forward to around May to see if there's some sort of bottoming pattern coming in, some sort of low for this correction. So keep a watch out for that, or at least that's what I'm doing here. And then whether we start to see a little bit more of a grind. You can see over the pattern that if we saw a top around March or April, then this grind could last into June before you see new higher prices, and you could expect some other significant lows there. So overall, end of the year, I'm still expecting higher prices, but I think it's just going to take a little bit of work here for the stock markets to figure out what they're doing next. Now, I've got a piece on the 50-day moving average for the S&P 500. It broke through its 50-day moving average. A lot of people do follow the moving averages, so I thought it would just be an interesting one to point out for now. We're down about 4.8%. As I said, largest correction since the October low of 2023. We're in an overbalance in time, overbalance in price, but we haven't broken any major support yet. 50% at 5,000, and also these lows, significant lows back here at about 49.50 for the S&P 500. So plenty of room to the downside. And in terms of the data here, the first close beneath the 50-day moving average on the S&P 500 in 110 trading days. So this is the longest stretch that the S&P 500 had gone without breaking underneath the 50-day moving average. Essentially just looking forward over this period, sort of the next 3 to 6 months, 81% of the time, the stock market is higher. So I'm looking at it at this stage here, where we could see about that 3 to 6 months. Look at this top here from September and where it started to break out again, about 66 trading days. And then if you look at the top from July to where it broke out again, that was about 134 trading days. Oh, sorry, 94 trading days, about 134 days. So it fits within the pattern of breaking down from the 50-day moving average, taking about that 3 to 6 months. You'll see the stock market higher from that point there. The USD is getting closer to the 107. So it's going to be interesting to see how it reacts to 107. Right now, trend is up, market's up, green days are there, it's going up. There's nothing else to be said about it. The important part next is how does it fight the battle at 107? As it got rejected last time, that's the 50% failure there, and then came back down. Does it go above it this time and then start to head towards some of these previous lows at about 109? I think that's going to be the really interesting part. Now, when this does find some resistance and start to turn, we might see asset prices around that period, maybe within the week or two, or somewhere around that, put in some sort of bottom and then start to head higher. And that might also be similar for BTC. That's why I'm keeping track of this, and you guys as well on the channel. As I said, hit the like button and subscribe if you haven't already. You did a friggin' fantastic job in the last video, 5,000. I think it's one of the most liked videos. We are beating the algorithm, so I appreciate your help here. All right, guys, Bitcoin, 4-hour chart. The resistance at 67,000 was met 2 days ago and it got rejected. However, we're just holding above the current low after the war weekend. That was at 61,300. So we're just holding above that, trying to recover some of the losses, right? Now to the upside, 67,000 is still in play. What has to happen? Bitcoin needs to get above 67,000, consolidate to then push those next targets. 69 is a key point. We've looked at 71,000 as being another key level. And then the complacency bounce there, the fake out at 72,700. So plenty of overhead resistance. I'll get to the 30 to 40% corrections and the opportunity here in just a moment, but these are the levels to watch. That's the major one there right now, $67,000. That could invalidate some of the downside. So just want to mention that before we get into the major numbers here, but it has to stay above that and then consolidate above that level. A day or two above is not enough. Like you could see with the day here on the Monday, Tuesday of last week, it got above it for a couple of hours and then it broke back under. So it was essentially a fake out. That's what we're going to watch out for now because of this trading range. When there's no clear trend, then the trading just gets much more difficult and the trends are more difficult. It's basically no clear trends that form. When the market gets into fresh territory, then the trends become a lot easier and trend trading becomes a lot easier. Whereas for now, it really has to do a lot of work to get out of this zone and then consolidate and then press again and then push again and get past those levels. So that's for the short term, 4-hour, the daily chart. Now, if we look towards the downside, if this is to fail again, roughly 67 or even those levels there at 69 to 70, then the probabilities increase for Bitcoin to come back and break through $59,000 to $60,000. That, from what we can see from the chart, opens up the floodgates for further downside, somewhere between the low to mid $50,000. Chill out for a second. I know people get really triggered on that. That's if these things happen. There's always ifs. There's no 100% confirmation when it comes to trading. And I know people want huge guarantees. Unfortunately, no one knows what happens on the black side of the market, on this black side of the chart here. It's all a guessing game, but what you do is put the probabilities on your side and then assess the risk. All you're doing is managing your own risk. That's as simple as it can be. You're not setting a target of $80,000, I get out, or $50,000, I get in. You have to assess the market at that point in time, because if it doesn't get to 50K and it gets to 51, then you have to be ready to pivot if the signs are showing that there is a bottom forming at that point. So that's what I'm going to look at moving forward. So that's the daily chart, similar sort of thing there. Onto the longer term timeframes. The weekly chart gives us a 50% level at 56,000. That's why I'm suggesting low to mid $50,000 should we break down from this point. So for now, April is sitting at an 11% loss. Of course, still 13 days to go. This might be that red month that stops the 7-month green streak. This is all part of the statistics that we showed a month ago while everyone was talking up $100,000 Bitcoin before the halving. Personally, not my cup of tea. I would delete any of that sort of jargon. 100K for the halving, all this sort of, pumped up prices. That helps clear the noise because the next stage of the cycle is going to get even louder. So if you want to make life easier for yourself, get rid of that noise that just keeps saying 100K Bitcoin for certain events in the future. So anyway, looking at the swings here, we were following the probabilities that the market wouldn't see 7 months, or the probabilities that you had 7% chance that you would see 7 months in the swing in the same direction. We saw 7 green months, and seeing 8, there was a 0% chance. Of course, throw 1% in there, but it was very unlikely that we were going to see 8 green months because we hadn't seen it before. We could see it, so throw 1% chance there, but it hasn't happened before. It seems unlikely at this stage that we would see a green month now to make it the first time in history. So again, the probabilities win out. And in terms of the swing, well, 7 months in a row was at a 7% chance. So I didn't really like those chances there. We got to the 6 months. We'll see whether we break down. That's still on the cards, right? We could still just grind here and not break 59K. And then if the following month went higher, well, then we would have 8 months in the swing. So these macro signals take long time to play out. Now we're at the 6 months, 14%. We've got at least a pause here at the moment, potential red month. But in terms of the swings within a cycle, that's this one down here. Each of the previous cycles has seen 3 on the bull side, 1 on the bear side for those two, but then 5 swings in 2021 of 5 months or greater. So you had the 6 months up, 6 months down, another 5 months here, 7 months into that top. Yep, that says 7. And then you had 5 months into the final all-time high. So lots of long streak moves within the cycle. This cycle, however, I think we might be more accustomed to something like this. Maybe it's going to be a 3 move, maybe a 2 or 3 long streaks into that last, that final top, just based on how much time we'd already passed in the early stage of the cycle. Previous cycles, you saw pretty long streaks early on. You can see that there and there, whereas this time around, we had a bit more of a choppy road to this current top. So maybe we have less long streaks, and we've already done one of those streaks. So with that in mind, and the halving coming up, we have the dates here. You've got 2012, 2016, 2020, and 2024. I've gone to the effort and chucked them up on the chart here. Here is 2020. Here is your correction. And this is the best correction that you could possibly hope for around the halving time, top to bottom, about 20%. So that was the halving there, May 11th. We had about a 20% drop as it ran up into it, 20% drop, and then basically 2 months sideways. It was just an absolute grind to get into this pump. Do note though, there was a 50% correction and then another 50 to 60% correction. So it had 2 50+% corrections before getting to the halving, and it also had a 340% run to the upside. So there were already 2 major corrections at that stage, which we've only seen 20% corrections so far for BTC. Go back to the previous cycle, or the cycle before that, 9th of July, that is the halving date right there. You had a pretty significant correction, halving happened, volatility dried up, dump, end of story. That was the end. And then it went quiet at a higher price here, higher price again. And of course, the rest is history. We started to pump from there. So although it might be a bit of a scary title, 40% correction, just to label that one down for your top to bottom, there's your 40% correction. Before the halving, you had top to the bottom here was about a 30% correction. So something that Bitcoin could still, well, a few days left, but Bitcoin has done 22% corrections and it's at a 20% correction so far. It was an amazing opportunity at that time or around the halving. Even though it gets scary and there are liquidations occurring, you've got that opportunity to get into the market while everyone is still fearful. They're freaking out because of the losses. And then the move from that point is quite substantial. So I think everyone knows by now that after the halving, there could be a very significant move. And I say could be because nothing is guaranteed in this market. As much as the Bitcoin maxis and the halving lovers want us to believe that all the whales are buying up and the ETFs are buying up, I'm with you. It's okay. Markets, I think, have still got some more room to go to the upside. But just keep an open mind. Just keep an open mind about the market because no one knows for sure what happens into the black space of the chart. Okay, cycle before that, 2012. So we did 2016. Here's 2012. That's November 28th. That was the halving. But this was early days. Look, went from $15 to $7. So a 50% correction there for BTC. And as it got into the halving, you had another correction here of about 25-ish%. Started to run up to the halving, and then the rest is on from that point. Huge, huge gains. Early days, less money in the market, less people knowing about it. You get the idea from that point, okay? So in terms of Bitcoin and the turns, we've gone through that in previous videos. Here are the corrections from the halving itself. We put it onto a monthly chart here and go to logarithmic, just looking at those dates and those timeframes for the consolidations, 4 to 5 months. But the big one, which I want to show here, is it was roughly about 60 days to the low, and then it was a grind out. So we're about 30 days from the top now to the low. So we had the top on the 14th of March. There it is. And now we're at 30 days down to this current low point of $61,000. So 30 days down. What if we only have another 30 days to go before the low, but the masses still aren't back and it just starts to grind around a little bit as it continues to head higher, as it has done on multiple occasions, 2020, 2016, 2012, you see the correction around the halving time, it grinds out and then the masses leave and it starts to get a little bit more interesting for those who stick around, and then you get these really big pumps to the upside later after it breaks out of that correction. Now, if we are to go down about 30% from the top, that would take us out to about $51,000, $52,000. So right back into this zone before the market went on its final top. Now, if it went 40% from the top, that's getting a little bit crazy, but 40% would take us out to about 44. I'm not ruling anything out. I'm just looking at the possibilities. There is always a slim chance that we do see that type of correction. I wouldn't just put my stop orders only at 40%. I don't want to get greedy like that. I would look to the probabilities and suggest that we have seen 20% down already, and we've seen 20 to 22. So maybe I'll start to set some orders at roughly 20 to 22%. So in the high 50s, knowing full well that it could go further to 30%, down to 51, 52, 53, and knowing full well that there is still a fraction of a chance, just like there is with the interest rate rises, of a 1% chance going up to an interest rate rise here in the next meeting, that we could go lower, down to roughly where those previous tops were at 48K, or to the major 50% level, which is at 44,700. So that's the entire range down to that 50% level. Does it have to stay there? Of course not. Maybe it's a spike down and a close above, but I just want to present you the possibilities, all of those possibilities, and it's up to you to choose which ones suit your risk parameters and how greedy you want to get on those entries. Let me know in the comments section, are you going to get super greedy and only put stuff at the 40s? Or do you think there is a possibility of the low 50s? Or we just don't even break 59K, like that's basically the low there, and it just grinds out here for 2 or so months. Let us know in the comments section. I think it's going to be an interesting one as we move closer towards the halving and then post-halving for roughly 2 to 4 weeks. And I think that'll give us an idea of where this low might come in for Bitcoin. Doesn't mean we shoot straight up from there, but we could continue to climb higher on a bit of a grind basis to the upside. So that's a big look there at Bitcoin and the corrections that we've seen every single halving, and then the grind sideways until we get to the higher prices. What I'm also looking out for is the US dominance here, USDT dominance. We did see that low at the Bitcoin all-time high, as we have done on almost every single top going back to 2017. So a pretty decent chart again. Now I'm looking for a resistance level hit here, somewhere around 5.5-ish percent before maybe we see it push back down. So I want to see how it reacts to roughly around 5.4 to 5.5% on the USDT dominance. And maybe we start to see a breakdown again over the coming months, possibly over some point over 2024. I'll get into that in future videos because I did promise you a look at the altcoin charts before I talk too long. The total cryptocurrency market cap, again, nice solid move down here. I think this is opening up a fantastic opportunity. I'm getting way more excited or way more bullish about the market when it's down, because it's easier to buy low and sell high than it is to buy high at the peak after such a long run up. So you've had 4 weeks down, you had 4 weeks down, you had 5 weeks down, and then a grind here to 9 weeks. So you can see a lot of the move had been done in 5 weeks. Understand that? Most of the move had been done already, and then it was grinding out for about 2 months. So maybe that's what we're in now. Maybe most of the move is done. We've hit the 50% level here at about $416 billion for the total cryptocurrency market cap minus Bitcoin, ETH, and stables. And then maybe we're just sort of a bit of a grind out for the next couple of months. We'll have to wait and see for altcoins, but this is looking way better than trying to buy everything on that big boom up when everyone is super excited about every other freaking meme coin and all the other garbage out there, right? Now, if you do want to get into the trading, TIA Premium, link in the top of the video description. The guys are crushing it over the last few days. 300, 200, 200%, 600%, 900 here. That's nuts. Well done, Ricardo. And the rest of the guys are doing pretty well on their trades over there as well. I've got some other stuff to look at in future videos, but I think I've gone long enough here. Render, Sol, and a couple of others. So stay tuned to the channel. Thanks again for pumping the likes up and us helping beat the YouTube algorithm. I'll see you at the next video. Till then, take care and peace out.